look, I tweeted yesterday and said I thought you were crazy to actually buy Microsoft ahead of earnings, only because they just laid off 10,000 employees, which is 5% of their workforce. And there's no way, like, I knew the numbers were going to be okay. The current numbers are going to be okay. And I almost shot myself in the foot because the stock immediately went up 4%. The numbers that they reported the past 3 months, and they were okay in line. It's not a surprise. A lot of companies are going to be either in line or beat because they lowered, these analysts have lowered estimates dramatically, significantly into the quarter, more than 7%. So it makes it a lot easier for these companies to beat, right? So, but it's the guidance, right? And if you're laying off 10% or 5% of their workforce, 10,000 employees, and you're going to report that guidance is great and good. I mean, you want to see those 10,000 people on your front lawn protesting. That's how you get it. But, Microsoft is no way going to report that. And that's what happened. So when the call came out, the stock immediately went up 4%. Now it's down like 3-4% for the day, bringing down the whole market, bringing down a lot of cloud companies. And the guidance was not that good. And people think it's going to get a lot worse based on what they're saying. So, when I'm looking at earnings, I think they're going to have to come down sharply for Microsoft and a lot of these cloud companies.
Microsoft is, this is a great situation or learning example of how do you look at markets, because Microsoft is one of the greatest companies out there. Yes, it's dropped what, give or take 40% from its recent highs, along with the other tech sector.
Is it down that much? I didn't know it was down that much.
Well, it was over 340, 340 to 220-ish. It's bounced off the least 20 anyway.
Yeah, wow.
But I was actually impressed, even though growth is slowing in the cloud division, it's still impressive to see them growing at 30+%. And what was wild is, you've talked about this in the past, and now and going forward, we want to pay more attention to this. The cloud grew 38% constant currency. I think that got dropped down to 31 when you factor in currency, to your point.
Which is the real number.
Right. But to your point, that's just shows you the significance in international, in currency exchange rates. Nobody kind of cares about that when things are going up. That's a significant difference, significant dollar amount. You're right. It's reality. But my point is that it helps investors kind of understand what's going on and why that's important. Overall, this is an easy thing. If you want to trade Microsoft, it's going to bounce around a little bit. If you can buy Microsoft and hold it for 3 years, 4 years, I don't think there's much risk there at all. This is a company with optionality because it's going to print money. It's got a good senior manager, at least in line. And Frank, they're getting into that AI chatbot GPT billion-dollar investment that's going to take over the world and do everything.
You got to look at that technology. It's unbelievable. And remember, it's the AI. It's already built. So now from this point on, it gets smarter. It's going to be able to write things for you in your voice. It's really incredible. I'm really starting to really dig in, especially from the publishing side of the industry. It's unbelievable. It's fascinating. And the fact that, their investment that they made, I think they said that they're going to be one of the exclusive providers of that investment, where the early investment, they just invested, I think, another $1 billion, but the early investment included that, I'm pretty sure it's like exclusivity where nobody else, in the private stage, they have access to invest in it. And I'm not sure if nobody else does, but they have a special clause in there, which that's why you're not seeing, some of the other companies invest in specifically that technology, but not that company. But it is interesting, and Microsoft did a great job with that. Now, here's my take on Microsoft, which is a little different. It is one of the greatest companies in the world, but which pushed the Amazons, even the Apples, the Googles, the Microsofts, all these companies will push them to the $1 trillion valuation is cloud. It was a game changer where this is a massive high margin business. And when you have high margin businesses and you see them slow, or you see a company slow, mostly technology and software companies, the reason why those companies get hit the most is because it's much harder to cut costs when the only way is just to get rid of employees, which is what you're seeing across the industry, where if factories, you can close factories. Immediately you can have, in 2 quarters, you can cut, there's just so many things. When your margins are that high, it's not as easy. Right. So, in terms of cutting, but you talk about the growth, which is 31%. Okay. Now the stock's trading at a pretty high multiple, which is 23 times forward earnings. Right. So that's a little high. There's a lot of companies that are trading much higher. You deserve that premium to the overall market. Okay. Because you're on Microsoft and you've been growing. But now this is like one of the only growth drivers. Right. And it's fine because it's massive. But now you're seeing the slowdown. And that's what's scary, because it's pretty strong at 31%, and you can say that's great, but it's much less than 35% that was expected, which drives the multiple, right? So you could be one of those people that say, well, it's 31%, but here's what happened, because when the stock went up, they reported good numbers like I figured they would because they lowered their estimates, and then the guidance was weak, and then on the quarter, management really got into it, and they said the PC market was in line with expectations, but executional challenges impacted our Surface business. They said advertiser spend declined slightly more than expected, which impacted search and news advertising and LinkedIn. The company is seeing customers exercise caution in this environment, and it saw results weaken through December. That's the last part of that quarter, which means they're weakening through December, which tells me they're going to be weak going forward. So it wasn't like, hey, it was weak
when they report current earnings.
When they report the next earnings. That's what's scary, right? Because now you're seeing it. You're really seeing this thing. And that's what scares me about this market is it's constant demand destruction that's not going away. It's not like, oh, okay, we're done. The Fed continues to reduce liquidity. I don't know if you saw Capital One. I mean, horrible numbers. Delinquency's up. Just the numbers are getting worse and worse and worse, and they're going to continue to get worse throughout the year, right? And the Fed's not going anywhere. I discovered that I talked about that yesterday when there's a lot of measures and inflation that's actually going a lot higher now. Okay, it was supposed to slow down and moderate. It's going the right direction, but I mean, if you look at gasoline prices, you look at oil prices, you look at copper prices, you look at food prices, it's still very, very elevated, and these are ones that impact consumers the most. So the Fed, if your bullish case is the Fed's going to reverse course, they're not lowering rates next year unless we see absolute crash. But the company also saw moderated consumption growth in Azure, and lower than expected growth in business across the standalone Office 365, EMS, and Windows commercial products. So that's tied into the rest of their business, right? You look at personal computing, which includes Xbox, it's down 19%. So when cloud's not working, it really hurts the rest of its businesses, right? So if that wasn't bad enough, the EU is about to launch an antitrust investigation into Microsoft, which you just reported. This follows the Justice Department and I think it's like 7 or 8 states filing a lawsuit against Google, which is, the monopoly in digital advertising and search. And Google's like, no, we don't. You're going to hurt publishers, even though they do have a monopoly. But slower cloud growth is significant because this is what drove the biggest companies, right, in the world to those $1 trillion valuations: Google, Apple, Microsoft, Amazon. And with this slowing, these companies, Amazon's taking a hit today. You're going to see this bring down the entire sector because it's such a heavy weight. And it's why one of the things when you look at the NASDAQ, why I suggest buying puts against the NASDAQ. And yes, it's been up 8%. Those moves are absolutely normal. If you're looking at 2008, we had a move of 20% higher just from October to December from December. So it was like 2.5, 3 months. We had a 20% move higher, a 24% move higher, and a 10% move higher in 2008. In the middle of the market, at 2008 to 2009, going down 45%. Those were moves. Like in 3 weeks that happened, 4 weeks happened. So this is normal what we're seeing, but the bottom line is it's about earnings, right? And you could lower those estimates and you can revise those freaking numbers as much as you want, Daniel. But I'm going to tell you, when you look at the actual numbers, they're trading at 23 times forward earnings. Do they deserve that premium? Because year over year, how much do you think their sales grew if I had to ask you? Year over year. At a company trading at 23 times forward earnings.
I would guess single digits for Microsoft.
Okay, so only 2%.
Oh, I would have guessed higher than that. I would have guessed like 7 to 8. Year
over year, so this quarter compared to the last comparable quarter last year, where do you think earnings are? If you had to guess.
Flat.
They're down 7%. Okay, so when you're revising those estimates, there's still the numbers, right? You're still reporting the numbers. You might say, oh, they beat the analyst estimates, and they go up, like they did yesterday, a little bit. When you look at the numbers at a company trading 23 times forward earnings, impacted with their biggest growth driver, it's clearly slowing. They said that on the call. It's impacting all their other segments. I mean, this is like, the bellwether of technology that's in everything, telling you it's slowing. They just laid off employees recently. They didn't do it 6 months ago, 3 months ago. They did it last week. Okay, they're not going to lay off employees if they believe that this is the bottom and we're going to start growing. They think things are going to get a lot worse. And they expressed that on the call, and good for them. They were open. They weren't like Ford who bullshit you. It wasn't like Disney who bullshit you and said, things are great, until finally it's going to blow. It's going to blow up in Ford's face too, because now with Tesla lowering prices, I don't know how they're going to make money on cars. I really don't. The EV vehicles and a $50 billion is spending. I mean, good luck with Ford. But again, they're going to keep saying the right things and reporting and manipulating their earnings and pushing forward contracts. Eventually, those numbers are the numbers. Okay, so you're looking at this and more in tougher times. So if you're growing earnings per share, like you said, if you're growing 10 to 15%, a 23 times multiple is not expensive. But when earnings per share are declining year over year, and Microsoft is saying that we're going to see even slower growth, I mean, you're seeing a stock that could easily decline 15 to 20% from here at that 23 multiple. And that's what worries me about the overall market with Microsoft. But you see where the weakness is. I mean, how do you buy Microsoft here when it's warning you of weakness and it's still relatively expensive stock here? Even though you can't look at how much is down.
Yeah.
Stock can go down 60, 70%. You can be like, wow, it's a great bargain. No, it could be much more expensive. If earnings are crashing, you're starting to see earnings come down for these names, and they're all starting to warn. And you saw it yesterday, even with the GEs, the industrials, right? That was a place to be, industrials. I don't know if you saw the rails. Demand is falling off a cliff. It's falling off a cliff, and it's supposed to fall off a cliff because that's what happens when you significantly raise rates by the fastest pace in the Fed era. They're going to stay that way for a while. The Fed is, 100% in QT mode. Remove hundreds of billions of dollars every quarter from the market, at least over the next 4 to 6 quarters. That's what you're going to see. And a lot of these companies, you think it's factored in. After this rise in NASDAQ, I'd be very, very careful. I covered that yesterday, but that's just my take on Microsoft. It's a great company, but I just think you're better off buying other stock.